Welcome back to Smart Stock Sam, the channel where we cut through the market noise and find the opportunities hiding in plain sight. Today, we are diving into a company called DataVault AI, ticker DVLT. And if you have ever asked yourself whether $750 million in secured contracts could be completely invisible to the broader market, you are about to get your answer. We are talking about a stock sitting at 67 cents that Wall Street analysts have slapped a $3 price target on. A company that just turned profitable, that is being loaded up by BlackRock, Vanguard, and State Street, and that is positioned at the center of one of the most explosive themes in all of finance right now, real-world asset tokenization. The reason almost nobody is talking about this story is that it is buried underneath a geopolitical shockwave, and that is exactly where the opportunity lives for patient, forward-thinking investors. Let's get into it. Now, to understand how we arrived at this moment, you have to appreciate two massive forces that are currently colliding head-on with each other. On one side, you have a record-breaking commercial story. In the first quarter of 2026 alone, DataVault AI secured a $750 million tokenization pipeline. That is not projected revenue. That is not a letter of intent. Those are locked-in secured contracts covering copper and gold mining tokenization, and they carry $77 million in associated fees. Management had set a full-year 2026 revenue target of $200 million, and by the end of March, DataVault had already knocked out nearly 40% of that annual goal in one quarter. Let that sink in for a second. On the other side of this collision, you have one of the most jarring geopolitical events in recent memory. Peace talks in Islamabad collapsed on April 12th, and a naval blockade of the Strait of Hormuz was ordered. Oil spiked more than 7% and crossed the $100 per barrel threshold essentially overnight. When energy costs spike and war drums beat, the market does exactly one thing mechanically. It dumps speculative small-cap tech and hides in safe havens. It does not read balance sheets. It does not check contract pipelines. It simply sells. And that indiscriminate panic selling is precisely what created the disconnect we are analyzing today. The stock will not fall because the business deteriorated. The stock will fall because the entire market got scared at the same time, and DataVault got caught in the crossfire. Here is the commercial picture in full. That $750 million pipeline is not just a headline number. It represents DataVault becoming the digital infrastructure layer for commodities markets, essentially building the plumbing that allows real-world physical assets like copper and gold to be tokenized, verified, and traded on blockchain networks with institutional-grade efficiency. The fees attached to these contracts, $77 million, are the kind of recurring, high-margin revenue that institutional investors underwrite at serious multiples. And management is not slowing down. They are actively pursuing expansion into the Swiss banking sector and the legacy financial hubs of London. They are targeting asset-rich environments with trillions of dollars in stagnant, illiquid assets waiting to be mobilized, and they are offering those institutions a ready-built, battle-tested standard. They are not just selling software. They are exporting an entirely new financial operating system to the world. Just last week, on April 7th, DataVault was on stage at the XRP Tokyo keynote, showcasing their proprietary AI agents and real-world asset tokenization running live on the XRP ledger. That appearance matters because it places DataVault directly inside the conversation around institutional blockchain adoption in Asia, one of the fastest-moving capital markets on Earth. And with upcoming keynotes in London and Zurich already on the calendar for the second quarter, this is a company that is deliberately and systematically inserting itself into every major financial center on the planet. That is not the behavior of a company hoping for a lucky break. That is the behavior of a company that knows its technology is ready and knows its window of opportunity is wide open right now. Now, growth is always exciting. But in this market, the question that genuinely separates the real stories from the noise is simple. Is anyone actually making money? The answer for DataVault is a resounding yes. In the fourth quarter of 2025, the company crossed the single most important threshold for any growth stage tech business. They posted a $4.2 million GAAP operating profit. For a small-cap blockchain and artificial intelligence firm, that is not just impressive, it is extraordinary. The vast majority of their competitors are still burning through cash at an alarming rate, relying entirely on future promises to maintain investor confidence. DataVault has moved past the survival phase. They have a profitable and scalable business model. They have secured real contracts with real clients, and they are expanding globally at pace. When a company stops being a story and starts being a genuine profit machine, that is historically the moment when institutional buy orders begin to arrive in serious volume. Which brings us to the elephant in the room. If the fundamentals are this strong, why is the stock still sitting at 67 cents? We already touched on the macro shock, but let us zoom in on the price action itself. On April 9th, the stock closed down over 4% as the market absorbed the escalating regional tension. On April 10th, the stock recovered nearly 3% to close at 0.6779, along with broader market in anticipation of peace talks between US and Iran happening in Islamabad. What that tells us technically is that the 66-cent level is functioning as a firm psychological floor. The volatility you are seeing in the daily candles is 100% headline-driven. It has nothing to do with the $750 million commercial reality unfolding inside this business. It is pure external noise temporarily overriding internal signal, and that gap is the opportunity. From a technical standpoint, the setup is what chart analysts describe as mechanically compressed. The stock is trading below its 50-day moving average of 70 cents and significantly below its 200-day moving average of $1.22. In other words, the stock is sitting at a price that is fundamentally inconsistent with where the business is operating. It is coiled like a spring. And coiled stocks under these precise conditions, where the underlying business is performing at its strongest while the price is at its most suppressed, tend to snap back with significant and rapid force the moment a single catalyst releases the pressure. You do not need a full geopolitical resolution. You just need the noise to quiet down for even a brief moment. For the week of April 13th through the 17th, here is how the trade is structured. The entry zone is between 66 and 67 cents. Major support sits at 67 cents with a rock-solid floor at 65 cents, which is where the 100-day simple moving average is currently anchored. On the upside, your first resistance level to watch is 69 cents, followed by the major 50-day resistance at 70 cents. If DataVault clears 70 cents on volume, the technical path to $1 becomes clear and fast. In the bullish scenario, any easing of macro tensions or even a natural shift in market attention toward major bank earnings like Goldman Sachs reporting season could see the stock retest the 73-cent level quickly. In the bearish scenario, a further escalation in the Strait of Hormuz situation could press the stock toward that 60-cent floor. But here is the critical asymmetry you need to hold on to. The bearish scenario is driven entirely by external energy costs and geopolitical fear. The bullish scenario is driven by actual company earnings, actual secured contracts, and actual GAAP profit. Over any meaningful time horizon, earnings always win that argument. Now here is the metric that could accelerate the entire thesis dramatically and with very little warning. There are currently over 79 million shares sold short on DataVault AI. That represents 22% of the entire float. The days to cover ratio is nearly 3, and the borrow fee is a painful 23% annually. Think about what that actually means. These short sellers are paying 23% per year in carrying costs to bet against a company that just posted a GAAP profit, secured $750 million in contracts in a single quarter, and is being actively accumulated by the world's largest asset managers. They are trapped, and they are bleeding capital every single day the stock refuses to collapse. Any de-escalation in the current crisis will force those short sellers to cover their positions simultaneously, creating a liquidity squeeze that could push the stock to my short-term target of $1 with very little resistance standing in the way. Speaking of the smart money, let us talk about who is actually buying right now while everyone else is panicking. State Street increased their stake by a staggering 52,000%. Vanguard Group added nearly 11 million shares, representing a 900% increase in their position. BlackRock added 4 million shares. These are not retail traders chasing a social media trend. These are the most sophisticated and data-driven capital allocators on the entire planet, and they have loaded their positions during the most recent quarter with remarkable conviction. When the world's 3 largest asset managers accumulate millions of shares at suppressed prices while the broader market panics, there is only one reasonable interpretation available. They believe the current price is a gift, and they are taking it without hesitation. Looking ahead at the second quarter calendar, the fundamental catalysts are stacked in a way that is hard to ignore. On April 22nd, there is the London keynote, putting DataVault directly in front of European institutional capital. On April 30th, the company distributes the highly anticipated Josh Gibson coin dividends to shareholders, which is a tangible and immediate financial reward for holders and a powerful attention magnet for new investors. Then in May, the Zurich expansion unlocks access to the Swiss institutional wealth sector, one of the most capital-dense markets on Earth. This is a steady, high-visibility pipeline of real fundamental proof points, each one designed to relentlessly overwhelm the bearish macro narrative with commercial reality. Every single one of these events gives the broader market another opportunity to wake up and focus on what this business is actually doing. Now, before we bring this home, there is something I need to be completely transparent about, and I want you to listen carefully. Nothing in this video constitutes financial advice of any kind. I am not a licensed financial advisor, broker, or investment professional. Everything you have heard today is produced purely for educational and informational purposes, and it reflects only one perspective based on publicly available information. DataVault AI is a small-cap stock, and small-cap stocks carry substantial risks, including significant price volatility, limited liquidity, and the real possibility of total loss of capital. The bullish and bearish scenarios discussed here are speculative projections, not predictions. With that said, let us bring the full picture together. DataVault AI is one of the clearest cases of a divergence between commercial reality and stock price that this channel has ever covered. You have exceptional fundamentals, a $750 million secured contract pipeline combined with genuine GAAP profitability. You have a bearish macro event creating temporary and indiscriminate suppression across the small-cap tech space, and you have deeply compressed technicals with aggressive institutional accumulation happening in real time and a massive short interest fuse primed and waiting to ignite. This is a mathematically mispriced asset sitting in a geopolitical vacuum that history tells us will not stay empty forever. My rating is a strong buy. The divergence is the opportunity, and the clock is already running. Now, I want to hear directly from you. Given everything we unpacked today, do you genuinely believe the real-world asset tokenization sector is the next multi-trillion-dollar infrastructure layer in global finance, or do you think this is still mostly compelling narrative with limited near-term institutional adoption at scale? That is a real question with real money attached to the answer, and I want your honest take in the comments below. That conversation is going to be worth reading. If this breakdown delivered value for you today, hit that like button right now. It costs you nothing, and it helps this analysis reach the investors who are actually looking for content like this. Subscribe to Smart Stock Sam so you never miss a deep dive like this one. And if you want to help this video to spread more as a valuable resource, share it with one person in your network who follows small-cap markets. Every single share genuinely moves the needle. Until next time, stay sharp, stay disciplined, and I will see you in the next one.